Welcome to another loan guide from VALoanRater.com. Today we'll be covering the VA purchase loan and why it's the best home buying option available to military borrowers. My name is James Shergill, licensed government loan specialist with Flagship Financial Group. And while the goal today is to give you a brief but comprehensive overview of the VA purchase program, if you have any questions, please don't hesitate to call 877-MY-VA-HUB to see if this wonderful program can work for you. So as its name suggests, the VA Purchase Program is a program whereby eligible veterans can purchase a home little or no money down, which in this market is a particularly good benefit since it's one of the only loan programs I know of that still allows that. It's a full documentation loan whereby the appraised value, credit scores, income, assets, and other debt obligations will be considered. And it's good for loan amounts up to $417,000 in most counties, but in high-cost areas, i.e. parts of California, Virginia, and the like, they go as high as $1,094,625. Now, unlike the Streamline Refinance, the VA Streamline Refinance or EARL Interest Rate Reduction Refinance loan, the funding fee that's assessed by the VA in order to do this loan is going to be a little bit higher. For first-time use, regular military personnel, it's going to be 2.15%, and every subsequent use thereafter it's going to be 3.3%. It's a little bit higher if you're a reservist or a National Guardsman, in which case it's 2.4%, and every time thereafter it's 3.3%. So what are the major benefits though with the VA purchase program as compared to a conventional financing option? Well, you get competitive rates, favorable terms, but with no mortgage insurance. It's virtually impossible, unless you have a loan program with lender-paid mortgage insurance, to find a program where you can get financing above 80%, even in this market, where you don't have to get a second mortgage, piggyback loan, or a loan amount higher than 80% loan to value, whereby you'd have to carry mortgage insurance. Purchasing a home using your VA eligibility also gives borrowers the ability to take advantage of a VA Streamline refinance should rates drop, which is of course a huge benefit. Feel free to check out our video on that. Underwriting on these types of loans tends to be a little bit more favorable than most, because if a borrower or a veteran is weaker in one area, they can make up in another. Ultimately, this isn't just because veterans deserve a kinder eye when it comes to underwriters. It's really also because of the VA guarantee. The VA functions as sort of a co-signer on these purchase transactions, whereby the banks are more willing to give veterans better, more favorable terms in exchange for the fact that if the borrower or the veteran were to default on the mortgage, the VA would step in and repay them for a portion of the loss. Veterans can qualify for a VA home purchase provided that it's been a year since Chapter 13 bankruptcy and 2 years since Chapter 7. Which you'd be hard-pressed to find any conventional loan option that manages to allow the possibility of home ownership in that short of a time frame. And although the VA will only finance 100% of the purchase price of the home, the purchase price can be arranged to include up to 6% seller concessions for closing costs. Now how that would work would be, let's say for example, I don't know, you agreed on a purchase price of around $100,000. But there was going to be about $6,000 worth of closing costs associated with the loan. Well, in that event, you could actually add in $106,000 as the loan amount and credit back 6% of that back to the veteran or the borrower to cover those closing costs. So they could literally get into their home with nothing out of pocket whatsoever. Which, if any of you have purchased a home and you have to consider all the things you need to buy to put into a home, can really come in handy. So who exactly is eligible for a VA purchase loan? Active duty veterans discharged during World War II or later without the status of dishonorable listed on their DD-214 or their release paperwork. It includes active duty veterans with at least 90 consecutive days of service during major conflict. It includes peacetime veterans and active duty personnel with at least 180 days of consecutive service, and also enlisted veterans whose service began after 1980 or officers whose service began after 1981 and have served at least 2 years. So what do you need to get started? As I said before, this is what's known as a full documentation loan. you're going to need your certificate of eligibility. If you don't have a copy of that, it's very easy to get one. You just need to contact your loan officer, and you can have them send you a form VA 26-1880, or you can even Google that and find that online. Send that over to the VA and get a copy of that. Your loan officer will definitely need that to get started. You'll need to designate who your choice is or preference for your homeowner's insurance carrier. If you don't have a preference, a lot of times people tend to use the same company that's handling their auto insurance. You'll need to send in a valid state and or government issued picture ID for all borrowers. That would be you and a spouse, or you and a co-borrower. Proof of your service ID, or better known as your social security number, which can be given in the form of your military ID, provided that it's got your social on it. A lot of times people will send in both their military ID and also the military ID of their spouses as proof for both borrowers' social security numbers. Well, as most of you may or may not know, as some of you may or may not know, if your spouse is not serving in the military, even if they have a military ID, the social security number that's listed on their card will be yours, not theirs. We'll need to see your 2 most recent years' W-2s and or tax returns for all borrowers, your 2 most recent pay stubs, and the 2 most recent monthly statements reflecting the available cash assets greater than or equal to 3 months payments. These are what are known as reserves, payment reserves. Essentially, the bank and the underwriters and the VA, they want to make sure that you not only have the desire to get into a home and that you have the income to support making that mortgage payment, but that you've got a demonstrable ability to save money. In this case, at least 3 months payments. Want to know more? To discuss a scenario based on your data, or just to clarify any questions you might have about VA loans, please call the VA loan team at Flagship Financial Group, toll free at 877-MY-VA-HUB, or shoot us an email at jshergill@ffgpartners.com. As a specialist in VA loans, Flagship Financial Group has earned wide acclaim, including an A+ rating from the Better Business Bureau with loan consultants who annually rank first in the nation for VA loan origination. Until next time, this is James Shergill for VALoanRater.com, proudly serving your peace of mind.